Sometimes we should look back and check on some predictions that we made. It's a way to assess our prior projections and hold ourselves accountable. Heading into 2024, I made some predictions about what stocks would thrive this year. Specifically, I gave 3 boring businesses poised for big 2024s. Well, I want to revisit that list and see where I was right and where I was wrong. Welcome to the Quality Investor. I picked these businesses especially because they were non-tech, yet reliably generated free cash flow for their investors. Each have wide moats and are leaders in their respective industries. 2 of them have PEs below their historic averages, and the other seemed absurdly expensive. I believe they were ready to generate exciting returns, either because they had strong growth plans or their industries were rebounding. So today, we are looking back at my proclamation and assessing the results. I want to give an update on where they currently stand and where I believe they will be the rest of the year. Now, not every one of my picks was a winner, and because of that, I want to review why I was wrong. Was I wrong because of fundamentals, such as my investment thesis was incorrect, or was it because of typical negative sentiment in the market? If it is the former, then I need to make tough decisions on whether to hold on to the stock. If it is the latter, well, it's just a matter of time before things turn around. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. The 3 businesses were Ulta Beauty, UnitedHealth Group, and Costco. Ulta is my worst pick so far. It's down 19.2% year to date. UnitedHealth Group has not fared much better, however, down 7% year to date. Costco, though, has been ripping. It is up 33% year to date, and it shows absolutely no signs of cooling off. So without further ado, we'll begin with Ulta Beauty, ticker ULTA. Looking at Ulta's year-to-date chart, you can see what I mean by a very disappointing 2024 so far. The first 3 months of the year, actually, they were trending upward and things were looking pretty good for Ulta. However, in April, the CEO announced that Ulta may be on the lower end of their Q1 guidance, and that sent the stock spiraling downwards, and it's really been trending downwards ever since. However, after their last earnings release, they did go up a little bit, about $20 in their share price on May 30th, and has been pretty flat since then. The reason for that slight tick up after earnings was they actually did beat what the analysts were expecting, especially in earnings per share, where they beat by over 3%, reported $6.47 a share, despite what the analysts believed at $6.28 a share. And I think that sort of reassured investors out there that it's not the end of the world with Ulta. I think that's why they've been down so far year to date, is more or less negative sentiment in the market and fears over a recession outside of anything really fundamentally wrong with Ulta Beauty. They're still growing in store count and they have excellent financials. And here is a quick look at some of those fundamentals for Ulta Beauty. You can see that revenue and income has trended upwards very nicely over the last 10 years or so. You can see that slight tick down in their earnings per share on a trailing 12 basis. And they have declined a little bit in free cash flow, but that is due to the large investment they're making in their stores as well as their online presence. But from a financial standpoint, they're fundamentally very sound. Notice here, they have absolutely no debt. And with that excess free cash flow that they earn, they have a large, robust share buyback program, which rewards investors in lieu of a dividend. And looking at my valuation summary for Ulta, I still believe they're very undervalued. They're currently at a PE of 15.4 and a forward PE of 14.8, well below their 5 and 10-year averages. They're very historically cheap right now. And assuming about a 6% free cash flow growth over the next 10 years or so, I have a margin of safety buy price at $482.01, or a forward PE of 18.1. In fact, even up to about $420, I have them in a 30% margin of safety range. So there's a lot of negative sentiment around Ulta and some other retailers in that more discretionary space. However, I don't believe Ulta is a discretionary consumer item. I think that makeup has shown itself to be resilient to recessionary pressures and seems to be a product a lot of beauty enthusiasts do not skimp on. They also have an excellent return on invested capital, showing the strength of management's ability to allocate that capital. Next, we are looking at UnitedHealth Group, ticker UNH. This is another stock that has just not performed up to expectations in 2024. Looking here, they're down about 9% year to date. And as you can see by their chart here, have been beset by just a lot of negative events that sent that stock spiraling downwards multiple times. The initial downward pressure was because of not only their earnings, but Humana's earnings, where the medical cost ratio came in a little bit higher than expected for investors. And then there was a DOJ inquiry into some of UnitedHealth's business practices. And then Medicare reimbursements for 2025 came in a little bit lighter than expected, continuing to send that stock downwards. However, the ship was righted a little bit after Q1 earnings. It shot right back up and has sort of been teetering a little bit since then, hovering in the 480 to 500 range for about the last month or so. From my financial perspective, UnitedHealth is very fundamentally sound. The growth here is like clockwork for them. They are down on a trailing 12 basis on both an earnings per share and, unfortunately, free cash flow. That is attributable, however, to two one-time events that occurred in Q1. One was they sold off a very unprofitable division in Brazil and took a hit there. Secondly, they were the victims of a cyber attack and had to pay a bit of a ransom to get out of it. Adjusting for that, however, we should see them back on track the rest of 2024. I feel like UnitedHealth is just one really good earnings report away from continuing back on their growth pace. Like I said, a lot of the downward pressure on their stock in 2024 has been due to negative news that does not affect the fundamentals of the business. If we look at the valuation summary for UnitedHealth, we can see that they're still in a buy range if we're using a 10% margin of safety, which is actually my preferred margin of safety with UnitedHealth. I think buying up to about $505 is still a pretty safe bet for UnitedHealth Group. You can see in a PE ratio, they're actually kind of expensive historically. However, in a forward PE basis, they're a little bit cheaper than their 5-year average and right in line with their 10-year average. This discounted cash flow valuation assumes about a 6% free cash flow growth over the next 10 years, which I think is very conservative given what they said in their last annual report. Definitely check out my video on my analysis of those Medicare costs where I break down what their real growth potential is on a cash flow basis. So I do think that as long as there's no real stumbles in earnings over the next couple quarters for UnitedHealth, they're going to finish out 2024 very strong. And the final stock from my predictions at the beginning of 2024 was Costco, ticker COST. Costco, of course, has been nothing short of a powerhouse. It seems like nothing can slow the stock down. They did have a bit of a dip after their Q1 earnings in March. It seemed like the market just really needed to take a breather on them. But since then, they've just been on an upward trajectory. It baffles the entire investment community. People seem to be astonished that a discount store that sells bulk items trades at a 55 PE, as if they were a software stock. That's just a testament to how good Costco's business model actually is. I've done an extensive in-depth video on that. You should check it out. It's linked in the description below. Costco is about as perfect as a business as you can get. They are up 36% year to date. That has blown away even my wildest expectations for 2024. I thought they would close out the year around 800. You can see they're well past that at 886, and they really show no signs of slowing down. Looking at Costco's numbers here, the fundamentals just speak for themselves. Just consistent, steady growth year after year for Costco. So their cash flow is definitely on the upswing here. And that's despite investing heavily in opening new stores internationally. In fact, Costco generates so much free cash flow that they reward investors with periodic one-time dividends, opting to do that instead of buying back their own shares, which is a nice little bonus for being an investor in Costco. They have very ambitious growth plans internationally, and they're one of the few retailers in the United States that has succeeded internationally. In fact, when their stores open around the world, it seems to generate a frenzy, similar to when Apple releases a new iPhone. If we look at Costco's valuation summary, we can see they're very expensive. They have a PE ratio of 55, which is well above their 5 and 10-year averages. Their forward PE is a 56.7. Those are astonishing PEs for a retail discount company. And the weird thing is their PE just continues to go up. It doesn't ever take a breather. They have continuous multiple expansion. Costco is famously always too expensive to buy, yet their stock price just continues to rise. Based on their discounted cash flow, I have a buy price with absolutely no margin of safety at $888.20. Their current share price is $886. So it seems like they're fairly priced based on my calculations. And if we want a 10% margin of safety with Costco, that is a buy price of $799.38. And it seems like a remote possibility that that price is going to come back down to the $800 level. And even then, it's still a forward PE of 51.2, which is absurdly expensive. But this stock just does not stop growing. So the best you can do with Costco is just hope for a significant drawdown at some point, usually after earnings that may happen, and try to scoop up some shares then. But it seems like Costco, as long as they keep hitting their store opening targets and continuing to grow that membership and continue to grow about 8 to 10% every single quarter, their stock is just going to continue to rise. So that was a reflection on my 3 proclamations at the beginning of 2024. I did a horrible job with Ulta. I think things are turning around slightly with UnitedHealth, and Costco has exceeded my wildest expectations. I still believe all 3 of these are fundamentally sound businesses and will continue to perform well the rest of 2024. Once some of that negative sentiment shakes off for both Ulta and UnitedHealth, we should see them return to growth. Although with Ulta, we do want to see them hitting the higher end of their guidance. That would signal they're back on track. We'll see if that happens. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.